everyone. So today, new day. So we'll be starting with new topic, that is accounting standard 11, which talks about effects of changes in foreign exchange rate. Accounting standard 11, AS 11, which talks about effects of changes in foreign exchange rate. 1. It's very simple. This particular standard gets triggered or it gets affected only if you are doing transaction in a currency other than INR. If you are doing any transaction other than Indian rupees, meaning in foreign currency, if you are doing any transaction, being purchasing the goods from a foreign country and paying it in dollars, euro, or selling the goods to a Japanese customer and receiving Japanese yen. Okay, so if you're doing any such foreign currency transaction, then only AS 11 will come into effect. Otherwise, no. Fair enough? Only foreign currency transaction. That's the scope. Everybody good enough? Alright. Sir, it's quite small. It's quite small standard in inter-level. Hardly few concepts are being tested. From this, we will build upon the base and you'll learn a lot more about it in Ind AS 21 and CA final. Okay, so whatever we have learned will be carried forward as well. Okay. Alright, so now before we dive into the questions, normally again from this chapter also you have some nice numerical questions. Maybe they may ask you journal entries, or you need to know the journal entry and explain it in words. So you have good numerical questions. So before we get to that, we need to know a couple of concepts. We'll learn that and then we'll go for the problems. Okay. Alright, so first before you dive in, you need to know something known as what is a monetary item. Have we discussed this before?
Yes, sir.
Yes, in the previous standard only we discussed. Monetary item means those items whose values are fixed. As per the standard, we say monetary items are those items which can be expressed in fixed denomination of currency. What did I say? Monetary items are those items which you can express in fixed denominations of currency. That in simple terms we can say value is fixed. Okay. So can you tell me or give you some examples of monetary items, sir?
Cash.
Monetary item means value is fixed. Okay, the example is cash. If you have cash 500 rupees, its value is 500 rupees only, meaning the value of that is fixed. So hence cash is an example of monetary asset. Even your bank balance is an example of monetary item. And then debtors, creditors is an example of monetary item, because if you have to receive around 10 lakh rupees from debtor, your debtor is going to pay you 10 lakh only. Not a pi more, not a pi less. That means the value is fixed. Similarly, the how much ever amount you need to pay creditor, only that much only you will pay. Will you pay extra? No. So that means creditor's value is also fixed. So that means that is an example of monetary item. Similarly, loan taken. If you have taken, let's say 1 crore loan from bank, 1 CR loan from bank, how much will you repay to the bank? I'm not talking about the interest portion. How much principal are you going to pay back to the bank? 1 crore only. Interest goes off to P&L. We're not talking about that. We're talking more from the asset liability perspective here. Fair enough. So loan taken. If you take 1 crore of principal loan from bank, the principal that will get repaid is 1 crore only. That means, is the value changing or fixed? Fixed. So loan taken is an example of what item? Monetary item. Similarly, loan given. If you have given, let's say 10 lakh loan to somebody, how much you will collect? Principal, how much will you collect? 10 lakh only back. I'm not talking about interest element. Okay, principal you will collect only 10 lakh. Value changing or fixed? Fixed. That means loan given also is an example of what? Monetary items. Monetary item is from the balance sheet perspective. Don't worry about the expense perspective. Okay, we're not talking about bad debts and all that stuff over here. We're talking from the balance sheet perspective. Okay, everyone. So got the meaning? Monetary item means those items whose value is fixed. NMI is what? Non-monetary item. Non-monetary item means value is fixed or fluctuates. Value fluctuates. Can you give me some examples of non-monetary item? You already discussed this.
Yes.
Investment in equity shares or debentures. If you invest in equity shares or debentures of a company, the value, you will receive the same amount of money or you may receive more. You may receive more also or you may receive less also. So is the value getting fixed or is it fluctuating? When we say fluctuation, it could be increase or it could be decrease. So investment in equity shares or debentures of a company is an example of non-monetary item. Can you give me some more? Property, plant and equipments, or we used to call it in our bachpan as fixed asset. So property, plant and equipment is an example of non-monetary asset, because if you buy an asset, let's say I buy a TV for 1 lakh today, after 6 months its value may be more or it could be less. Definitely value will change or fluctuate. So property, plant and equipment, intangible asset, inventory, all these components ka value fluctuates. They are not fixed. Hence all these are example of what, sir? Non-monetary item. Any confusion? This is the first thing you need to identify before you apply AS11. Okay, because the treatment of AS11 depends whether a component is a monetary item or whether it is a non-monetary item. This is important. Okay, sir, everyone. Let's take up one question also, just to get our just one ki tasalli ke liye, that's all. Come to question number 1. Classifying the following items as monetary or non-monetary item. Inventory. Tell me, sir. Inventory is an example of non-monetary item. NMI. Trade receivable. Trade receivable as in debtor. Actually, debtors and bill receivable. That we call it as trade receivables. Okay, not just debtors. Okay, debtors and bill receivable is shown under a main category known as trade receivable. Both debtor ka as well as bill receivable ka value is fixed. So that means it is an example of what? Monetary item. Correct, sir? Alright. Investment in equity shares. Investment in equity shares is what example? Value fluctuates. So it is a non-monetary item. Property, plant and equipment. Again is an example of non-monetary item. That's all. Don't expect these sort of questions. But sometimes it come also. 2 marks also they've asked sometimes like this. Okay. But quite rare. They don't ask it often. So you have got that understanding of monetary and non-monetary now. Is there any confusion? No. Yeah. Sorry, sir. Debentures. Like shares, sir. Debentures. He's saying, sir, shares I understood. Value fluctuate. But how about debentures? Like shares, no, debentures are also traded in the market. If you want to buy debentures, you can go goldenpie.com like this. There are websites where you can buy. We're not talking about interest. What did I say? Monetary item and non-monetary item. We're talking about the balance sheet component. Okay. So balance sheet, the debenture ka face value, no, whenever debentures get redeemed, you may get the face value back, or you may get something extra, or you may get something less. Redemption of debenture topic is there, which we will take it up. So value of debenture also fluctuates. We are not talking about P&L component, that is interest at all over here. Okay. All right. We are not talking about P&L components, but don't worry about dividend, dividend and all. Only balance sheet components, not P&L. Balance sheet component. Asset, liability. Yes, debenture is a loan taken by the company in thing, but when we're talking about investment. For a company, they have to repay fixed amount of money. That I understood. But when you make an investment in debenture, are you 100% sure you will receive the same amount of money? Or it may fluctuate. It may fluctuate like that. Okay, so this is done. Monetary, non-monetary overall. Now I'll draw a small chart. It is there in your chart book also, just for the sake of example. Based on this, we will solve a few questions. Okay, listen up first, aram se. Then we will go for it one by one. No need to copy, just observe. It's good enough. It's there in the chart as well. Sir, what accounting? This is important. Carefully listen, everyone. All this treatment is as per AS11. Okay. As per accounting standard 11. AS11 talks primarily about what, sir? Foreign currency transactions. That's all. If you have done some foreign currency transaction, then only AS11 comes into picture. Example could be purchase of goods from a foreign country or exporting the sale of goods to a foreign country like this. Okay. Let us say, sir, on 1st or let's say on 11th April 2023, I purchased goods. I purchased, or maybe I'll just put this little here. I purchased goods from United States, US. So the person or the creditor is there, where, sir? US. But I am there in India. But I purchased these goods, or rather I have imported these goods from US. My US creditor, no, is very clear. He's saying, I will bill you in dollars and you should pay me in dollars. That is his condition. He's saying, I will sell it to you, but I will send the bill in dollars and you have to pay me in dollars. And what is the dollar value of the goods purchased? 10,000. So he sent me a bill for $10,000. That means how much I need to pay him? $10,000. Okay, sir. When did I buy? Or maybe I'll just take this date slightly differently just for the sake of example. 1 minute. Let me make this as 1st January or 1st March 2023. It'll work out a little better. 1st March 2023, I purchased goods from a US vendor for the value of $10,000. Okay, sir? All right. Excuse me. Sir, though the bill is in dollars, I am in which country? India. Can I account? What is the journal entry for credit purchaser? Let's say it is a 2 months credit wala transaction. Meaning if I buy the goods today, I have to pay him only after 2 months. Okay. So now you tell me, what is the journal entry for credit purchase? Purchase account debit to creditors. Can I pass the journal entry purchase account debit to creditor $10,000 on 1st March?
No, sir.
In my books, can I pass the journal entry like that? No. Because what I have to do? The value is in dollars. I need to convert it into rupees. Yes. That means whatever is there in dollars, I need to convert it into rupees. For that, I need to know something known as exchange rate. Yes. $1 could be maybe, I think currently it's around 84, 85. Yes, somewhere in the 80s. Yes. So you need to convert that dollar into INR. Yes. Okay. What AS11 says is, if any transaction is happening, when a transaction happens, record all the transaction at transaction date ka spot rate. I'll write it first and then we'll explain. Transaction date. What did I say? Transaction date? Spot rate. What does it mean is, listen. Copying part and all absolutely later. Just check the screen. Enough for now. Good enough. When did this particular transaction happen? 1st March. On 1st March 2023, no, $1 was equal to, let's say, 80 rupees. Assumption. On this day, you'll get the exchange rate. No, obviously there are places where you can aramse get the exchange rate. Let's say on that day, $1 was how much, sir? $80. That means whenever a particular transaction happens, on that day, check what was the exchange rate. Using that exchange rate, you pass the journal entry. Got it, everyone? So that means what is the journal entry you will pass on 1st March in this example? Can you tell me? On 1st March 2023. Maybe 1 minute. Let me bring this down a little more. On 1st March 2023, I'll pass what journal entry? Purchases account debit. How many dollars? $10,000. But I need to convert this dollars into rupees. On 1st March, $1 was how much, sir? 80 rupees. That means 10,000 you will multiply it by 80. So it will become what? 8 lakh. So purchase account debit to creditors account 8 lakh rupees. This is the journal entry. Any confusion, anyone? Okay. So is this the transaction? Yes. This transaction, did you convert it into Indian rupees? Yes. Using what exchange rate? The exchange rate applicable on the date of transaction. That we call it as transaction date ka spot rate. Whatever foreign currency transaction you're doing, initially whatever you're doing, whatever on that day, whatever is the exchange rate, use that and convert the foreign currency into Indian currency. First aspect. Any confusion in this problem? Any confusion, anybody? Or good enough? Good enough, huh? All right. Sir, let's say he is giving 2 months credit. No, that means the due amount will be April, May. So that means we have to pay him the money only on 1st May. Correct, sir? Yeah. I have done the transaction on 1st March, but I have to pay him only on 1st May. All right. Between these two dates, there is one important date. Can you tell me what is that important date? No. This is the transaction date. This is the due date. Between these two dates, there is one important date that comes, which is what? 31st March 2023. 31st March 2023. Generally, we close our books because most of the companies close their books on 31st March. Correct now, people? Okay. So on 31st March, let's say the exchange rate on 31st March is on $1 has become 85 rupees. Exchange rate fluctuates. No, it could be anything. I've assumed on 31st March, $1 has become how much? 85 rupees. On 1st May, $1 has become 90 rupees. Just assumption. Any date it could be. I've just taken for the sake of example this particular data. What the standard says is, okay, in between transaction and settlement, if there is any balance, in between transaction date and settlement date, if there is any balance, now should you have to pay this creditor? Should you have to pay this creditor, sir? Yes. Have you already paid, or is there any balance? Balance. Correct? No? Now, first, check whether this creditor is a monetary item or whether it is a non-monetary item. Whatever balances, foreign currency balance you have, first check whether that balance is a monetary item or a non-monetary item. Yes, in this example, you tell me creditor is a monetary item or a non-monetary item? Non-monetary item. Monetary or non-monetary? Non-monetary. MI, NMI? Online. Padapat tell. NMI, one response. Offline, monetary item. Somebody is saying non-monetary item. Why?
It's 8 lakh rupees.
He is saying, sir, the 8 lakh it is 8 lakh rupees. If dollar value changes, then this value also will change. That means value is actually not fixed. It is fluctuating. So on that ground, sir is saying creditor is a non-monetary item. What do you think your response for that is? Sounds right only. Yeah. And it is also smart. What they are saying is, what did I say monetary item is? Value is fixed, expressible in fixed denomination of currency item. The currency could be any currency. The currency could be any currency. Here you have purchased the goods in what value? $10,000. How much are you going to repay back to him? $10,000 only. Is the value fixed in dollars? Yes, monetary item. Yes, rupee value may fluctuate, but monetary item means value should be fixed in any currency. Doesn't matter. Are we okay? Is the dollar value fixed or fluctuating? Fixed. If this one. How much you will pay to the creditor here in this example? $10,000 only. Will you pay more or $10,000 only? $10,000 only. That means the dollar value of this creditor is fixed. Fair enough. So it is an example of monetary item only. Those of you who said a non-monetary, are we okay with that now? Everybody give me a confirmation on that. The value could be fixed in any currency. INR, US dollars, Japanese yen, anything. Doesn't matter. Here the value is fixed in what? Is it fixed in rupees or is it fixed in dollars? It's fixed in dollars. Okay, got it. Awesome. So now check whether a component, whether the item is a monetary item or a non-monetary item. In our example, creditor is an example of what now, sir? It's an example of monetary item. What the standard says is, if you have any monetary item, okay, that monetary item should appear in your balance sheet. Balance sheet you prepare on 31st March. Yes. So the monetary item should appear in your balance sheet at closing rate. The monetary item should appear in balance sheet at a closing rate. What does closing rate mean?
That on the balance sheet date, we have to convert that.
Perfect. When are you closing your books? 31st March. You're closing the books on 31st March, no? So the exchange rate on 31st March, we call it as the exchange rate on 31st March, we call it as closing rate. Once more, got it. What did I say? Or let's have a quick recap. All the transaction, foreign currency transaction, initially are recorded at transaction date ka spot rate. Whatever day you are doing the transaction, use the exchange rate on that day and convert it. Are we fine? All right. And then once you have done the transaction, you need to also settle, no? Meaning when you purchase the goods means you also need to pay. Between the purchase date and settlement date, if one important date is coming, what is that important date? The balance sheet date. That is 31st March. Check whether that transaction, the component of the transaction is a MI or NMI, meaning monetary item or a non-monetary item. Here creditor, it's an example of a monetary item. All monetary item should appear in your balance sheet at a closing rate. People good? Okay. Now check, sir. Creditor I converted by, I used what rate for conversion? No, matlab what rate I used? $1 was equal to 80. Yes, but as per AS11, creditor should be shown in the balance sheet at a closing rate. What is closing rate, sir? 85. Did I convert using 85 or I converted using 80? 80. That means what I have to do now? I have to increase the value of creditor. Or in another way, this is a happy scenario or sad scenario? When I purchased $1 was 80 rupees. On 31st March, $1 has become 85. Happy or sad? Happy or sad? Sad. Why sad? Sir, perfect. When I did the transaction, okay, I thought on $1, I need to pay only 80 rupees. Now to get $1, how much I need to give to the bank? 85 rupees. That means to get the same amount of dollar, I need to give more Indian rupees. Correct, sir? Initially, when I thought $1 I'll get by just paying 80 rupees. Now to get $1, I have to pay 85 rupees. That means I'm giving more INR. So it's a profit scenario for me or loss scenario for me? Loss scenario. Yes or no? Correct, sir? Oh, excuse me. All right. So on 31st March 2023, what I have to do is creditor, I have shown it at, I've converted at 80 rupees, but I have to convert it at what price? 85. Correct? No? So that means I will write here two creditors. Agreed, sir? How much? I have to convert it at 85, but I converted only at 80. That means the difference is 5 rupees. 5 rupees for $1. But what is the dollar value of this transaction? 10,000. So I will multiply this by 10,000. So what will be the creditor value? 50,000 or 5 lakh? 50,000. Is it okay? So I'll credit my creditors by 50,000. Are we okay? Yes, sir. Once more, sir. Got it, sir. I have to debit something. Can I write purchase account debit? Again, did I purchase on 31st March? Huh? Why is this difference coming? Only because of that foreign currency fluctuation. Yes, no? So that foreign currency fluctuation of monetary item is or directly goes off to P&L. Doesn't matter whether it is a gain or whether it is a forex loss. Both foreign currency fluctuation, the gain as well as loss, both goes off where? P&L. That's all. Okay. Or if you wanted one more way, creditor, you credited initially by how much? 8 lakh. Now you credited by how much? 50,000. Total value of creditor is how much?
8,50,000.
The total creditors on 31st March 2023 is 8,50,000. Correct, sir? Now check. Is creditor a monetary item?
Yes.
What is the dollar value of that creditor?
10,000.
10,000. Monetary item should appear in the balance sheet at what rate?
Closing rate.
Closing rate. Closing rate means what?
That
The day you close the books. When are you closing the books here? 31st March. On 31st March, $1 was how much? 85. Multiply 10,000 into 85 is how much? 8,50,000. How much value you are already getting? 8,50,000. That's it. Is it okay? It could increase or it could reduce. Doesn't matter. You have to go on passing the interest. People good enough? Somebody said once more. Got it, sir? We have another 3 problems also. Don't worry. Just to explain the concept, I'm taking the numbers and explaining. Got it now? Yes. Okay. This non-monetary item, they are not testing. In fact, it is not, no word of this has been mentioned in our study material at all. Okay. This, they have completely ignoring it. I will tell you. Okay. But first, I will complete this scenario. Is it okay? This one is not there in your syllabus. You'll learn it in CA final. Okay. For now, maybe I'll just take this portion. Can I move it? Yeah. Don't worry. I'll give that for your knowledge sake, but I'll like to complete this. Okay. Sir, after purchasing the goods, can you keep quiet or you need to pay also? Pay also. That only we're calling it as what? Settlement. What AS 11 says is, all settlement should happen at settlement date ka spot rate. Settlement will happen at settlement date ka spot rate. Transaction will happen at transaction date ka spot rate. Settlement will happen at settlement date ka spot rate. Only if balance is there, then that balance you will convert using what rate? Closing rate. Or just to explain this further, in this example, when am I settling? Settling means when am I paying? When am I paying? 1st May. And paying means what is the journal entry for creditors paid?
Creditors to bank.
Creditors account debit to bank account. When am I paying this?
1st May.
So on 1st May 2023, I'm paying. So that means the journal entry is creditors account debit. Correct, sir? What is the balance of creditor in your books currently? 8,50,000. Yes, people. So to what I should write? To bank account. Check. You are paying on which date? 1st May. All right. How much you have to pay? $10,000. Sir, all these dollars, if you have to convert it into rupees, you need to take the help of banker only.
Yes.
On 1st May, if you are settling means, will he give you 31st March ka rate? Can you tell me? 31st March you give? No. Will he give? What will he say? Like you're buying shares on 1st May. You're asking your broker on 31st March ka whatever is the buying rate, you give me that. No. Will he give? Or on that day, whatever is the rate, that only he'll give. On that day, whatever is the rate, he will apply that and give you. Correct, sir? So on 1st May, what is the dollar rate? $1 is equal to 90. How many dollars you need to pay? $10,000. So 10,000 you will multiply by what here? 90. So how much you need to pay? 9 lakh. Happy or sad face? I thought I will pay 850, but unfortunately, because of this again, this foreign rate card gadbad, I have to invariably pay or end up paying how much? 9 lakh. So profit or loss? Loss. How much loss? 50,000. That loss also goes off where? P&L account. So the journal entry you will pass is. You can also write foreign exchange difference account 50,000 and then pass another entry P&L account debit to foreign exchange difference. Like that also you can. Foreign exchange difference, forex loss. Like this also you can give a name and then transfer that account to P&L or directly write P&L account in bracket. You can write forex loss. This is arrived as a balancing figure. Understood? Fine. That's what I've written in the chart over here. Transaction will be recorded at transaction date ka spot rate. Settlement will be recorded at settlement ka spot rate. But in between this transaction and settlement, if one important date arises, what is that important date? Balance sheet date. Then check whether a component is a monetary or a non-monetary item. If it is a monetary item, then monetary item should get reflected in the balance sheet at the closing rate. Okay, due to this conversion, if you are getting either any profit or you are getting any loss, that forex gain or forex loss, everything will be transferred off to P&L account. Maybe you can write that also in your chart. MI you convert using closing rate and forex gain or loss will go off where? Forex gain or loss to P&L account. I'll just give you a minute to process. Ask me if you have any doubts or if you're through, then we'll take a couple of more questions. Okay, NMI, we'll talk about it a little later. Don't worry about NMI for the time being. Vice versa in the sense, sir? Dollar value is not increasing, rather it is reducing. Huh? Doesn't matter. You have to see from our perspective, we are doing the accounting from the Indian entity perspective. Okay, in that case, it will be a sale. Record the same thing. Concept is the same. If it is a monetary item, transaction doesn't matter. All transaction at transaction date spot rate. Settlement at settlement date spot rate. Between that, if you are having balance sheet, monetary item will appear in the balance sheet at closing rate. Doesn't matter whether it is a debtor, creditor, loan taken, loan given, doesn't matter. All monetary item ka the same. You will convert it at closing rate and exchange gain loss will go off to P&L. Actually, exchange gain or loss, there is some extra treatment also that I will tell you little later. For now, in your mind, keep that this forex gain or loss goes off to P&L. There are certain exceptions or to this rule also. As and when I proceed, I will tell you that. People okay? Okay. Journal entry. Journal entry, don't worry. Next problem only we are doing this scenario. It will come. No need to copy that. We take up one more question to get our understanding a little better. Let this chart be there. This I have not filled it yet. Let it be on hold. Question number 2. Let's take that up, sir. Carefully listen, then you copy. It's fine. I'll solve it again. It's the same question like the way we have done it previously. You are required to ascertain loss or gain to be recognized for the financial year 31st March 20x1 and 31st March 20x2 as per accounting standard 11. So they're asking that gain or loss. Goods has been purchased on 1st January 20x1 for how much dollar value? 15,000. And they're saying exchange rate per dollar, meaning $1 is equal to how many rupees? They're saying on 1st January, what was the exchange rate? On 1st January 20x1, it is 75. And on 31st March 20x1, the exchange rate is 74. What is this 31st March 20x4? It is the day on which you are closing the books. Or can I say this is the closing rate? People? Okay, this is the closing rate they have given. The actual date of payment is 7th July. On 7th July, the exchange rate is 73. So that means this, can I say, first is your transaction date ka spot rate. 31st March is your closing rate. 7th July is your settlement date ka spot rate. Can I say like that? Settlement date ka spot rate. Same example I had also taken. That's all, nothing else. Can we go ahead and pass the journal entry? They've expressed it in words. I'll give you in words also, I'll give you in journal entry also. You choose. Maybe you can answer like this only in exam. That's fine. Question number 2. We'll give the heading as treatment of forex gain or loss. We'll break it into 3 parts. We have 3 parts, no? Transaction date ka accounting, balance sheet date accounting, settlement date accounting. Like that, I'll split it into 3 parts. Write the provision and below that, write the journal entry also. Like that, we will solve. First, transaction date. Sir, what is the transaction date here in this particular question? 1st January 20x1. What does AS 11 say? What does AS 11 say? As per AS 11, all foreign currency transactions are initially recorded. At what rate? At transaction date spot rate. Or you can also write it as transaction date rate. That is also okay. AS 11 does not use the term spot rate. Ind AS uses that. It is fine. Even if you use it, not a problem. Transaction date spot rate. Done now? Now tell me, sir, what is the journal entry then? What have you done on 1st January? You have purchased the goods. What is the journal entry for purchases? Purchases account debit. What is the dollar value of the goods you purchased? $15,000. And on 1st January, what is the exchange rate? $1 was equal to 75 rupees. So give me the amount. 15,000 into 75. If you do, you're going to get 11,25,000. So purchases account debit to creditors account. How much? 11,25,000. Any problem, anybody? No. So this is the accounting for the transaction. Can I write the second section? Or anyone you want me to wait? Narration and all not required here. It's fine. Or if you want narration also, you can write what is this being purchases accounted. This is fine in these cases and all, in especially AS question and all. If you're writing journals, right, there you can skip the narration. It is fine. Okay, because the AS questions you can explain it in words also. You can explain it through journal entries also. It is fine. Here it should be okay. Even if you write also, not a big deal at all. Okay, first is over. So check the screen for a minute. You purchased on 1st January. You are settling on 7th July. Between these two dates, is there any important date appearing?
Yes.
Yes, you are closing your books. Before settlement only you are closing the books. On which date? 31st March. Okay. Check on 31st March. Do we have any monetary item? Only 2 components you have recorded, sir. What is monetary item here? Creditor is an example of monetary item. Sir, you purchase the goods means you will have stock, no? Yeah, stock is an example of monetary item or a non-monetary item? Non-monetary item. Non-monetary item, did I say you have to do anything? Have I spoken about it anything? No. So don't worry about the stock for the time being. After this problem or after some time, I'll tell you what to do for non-monetary item only for your reference. They're not asked. There is no reference to that in our syllabus right now. Okay. So that means on 31st March, we'll give the heading. On 31st March 20x1, is it? Yes. Okay. On 31st March 20x1. So what does AS 11 say, sir? As per AS 11, monetary items. Is it okay if I write MI? Monetary items should be shown in balance sheet. Or should be shown in balance sheet at what rate? At the closing rate. and any exchange gain or loss, where it will go?
Yeah.
And any exchange gain or loss goes to P&L account. Oh. That's your provision. Now, can I utilize those provision and pass a journal entry? Okay. All check now. Check the screen for a minute. Sir, the day you bought, $1 was equal to how many rupees? 75. On 31st March, $1 has become 74. Heartache or good news?
Good news, sir.
Good news. On the day I purchased, I thought to get $1, I need to pay how much rupees? 75 rupees. On 31st March, I have to pay only 74. That means I have to pay less INR to get the same dollar. So this is a gain or this is a case of loss? This is a gain for me. This is a forex gain. Correct? No? So foreign currency is fluctuating in my favor now. Okay. All. Now you tell me, sir. Now creditors I have converted already at what rate? 75. But closing rate is only 74. That means the creditors will come in your balance sheet at 74. But I've already converted it at 75. So creditor ka value I need to increase or reduce? Reduce. Creditor has what balance? Credit balance. How do you reduce? Debit. So the journal entry you will pass here is creditors account debit. Yes, no? I have converted it at 75, but I need to convert it at 74. That means how much extra conversion I've done? 1. For how many dollars? $15,000. So if you do that, how much creditors will reduce by 15,000 rupees? Okay, everyone. So creditors account debit 15,000. Am I paying this 15,000 or what is this? This is a gain arising due to forex fluctuation. That means directly I can write what here? To P&L account. Forex gain that has gone to P&L account. So being forex gain accounted, you can write the narration if you want. Being forex gain recorded. Or just for your reference, once again, creditor should appear in balance sheet at what rate? Closing rate. What is the closing rate? 74. How many dollars? 15,000. So creditors should come in balance sheet at what value? 11 lakh 10,000. Yes, no? Check your journal entry. You credited creditors by how much? 11 lakh 25,000. Then you debited creditors by how much? 15,000. 11 lakh 25,000 minus 15,000 if you do. What are you getting? 11 lakh 10,000. Automatically it is coming to the same number. Easy now? Okay. Sir, if it is 76, then it will be loss. Then you will pass the ultra entry. Correct. Creditors account will get then credited. The journal entry will be P&L to creditor. That is the example that I took. People okay? Anyone still copying or can I move on to the next section? Next section, huh? Over or one more drama is there? Settlement. Okay, so we will write settlement. And the settlement happened on which date? 7th July 20x1. So what does AS11 say? As per AS11, all settlement transaction, doesn't matter whether it is monetary or non-monetary, sir. Okay. All settlement will be recorded at settlement date ka spot rate. All settlements to be recorded. All settlements to be recorded at settlement date rate, or you can write settlement date spot rate. Fine. Okay. On the settlement date, check. Right now, okay, 1 minute, stop the screen. Watch the screen. Now you are showing the creditor at what value in balance sheet? 74. Yes, no? Now this rate 75, is it relevant for me or that is gone already? Okay. Till 31st March, I am showing the creditor at 74. Check. What is the settlement date ka exchange rate? 73. Happy news, sad news, what news? Happy news. Because till 31st March, I thought to get $1, I need to pay 74. But on settlement date, to get $1, I need to pay just 73. So I need to pay more rupees or less rupees? Less rupees. So that means again, it is a gain scenario. Correct now? All right. So now, what is the journal entry for creditors settled or creditors paid? Creditors account Creditor's account debit. Sir, what is the balance in creditor? 11 lakh 10,000. Basically 11 lakh 25,000 minus 15,000 if you do, you're going to get 11 lakh 10,000. Correct? Huh? To what account? To bank account. How much dollar you are paying? $15,000. On the settlement date, $1 was only equal to 73. So how much money will get deducted from your bank account? So 10 lakh 95,000. Is the journal matching or difference? Difference is a loss or a gain? Gain means you will debit or credit? Credit. So that means you will credit what here? To P&L account arrived as a balancing figure. How much is that? 15,000. Ah. Okay. So this is your forex gain, or you can write here forex gain recorded. Or you can write the provision also here. All settlements are recorded as settlement date spot rate and any forex gain loss. And forex gain loss goes where? Goes to P&L account. Like that. So that's what I've done here. And narration you can write being settlement recorded. Settlement recorded or settlement accounted, something like that. Problem over. Understood? Got the whole crux now? Only three things we discussed. Transaction, balance and settlement. And that too only related to monetary items. Now you want me to zoom in on anything? Anyone still copying any portion? Online? Second portion, huh? Sir, lengthy problem. Nothing like that. Okay. I mean, if it comes for 2 marks, cut off all the theory. Pass only the journal entry. It will become 3 journal entry. Take a call based on marks. If it comes for 5 marks, this much you can write. Hardly it takes what, 5 minutes? No. 5 minutes to maximum 6 minutes you can solve. So it doesn't this one. Okay. All right. So far, what and all? We just to go back to the chart. What have we discussed? Just to discuss, we discussed AS11. AS11 talks about accounting for foreign currency transactions. All right. For that, first you need to identify whether a component is a monetary item or a non-monetary item. Monetary item means that component ka value is fixed. Fixed only in INR or any currency. It could be fixed in any currency. So that which is fixed in any currency, we call it as monetary item. Those items which are not fixed in any currency or rather which fluctuates, we call it as non-monetary item. Then if you have to do about the conversion accounting, we have 3 aspects: transaction date, balance and settlement date. Transaction means the day on which transaction is happening. Any foreign currency transaction, doesn't matter monetary or non-monetary, all transactions are initially recorded at transaction date ka spot rate. And settlement will happen at settlement date ka spot rate. In between transaction and settlement, if you get any balance, then check whether a component is a monetary item or a non-monetary item. All monetary item should be shown in the balance sheet at closing rate. And if you are getting, since you have to show it at closing rate, you have to again convert. Again, when you convert, you may get some foreign currency gain or forex loss. That forex gain or loss goes off to P&L. Similarly, when you're doing settlement, you'll use settlement date ka spot rate, and any forex gain or loss will happen what? Any forex gain or loss again goes off to P&L. So that's all we have discussed. All right. Thank you.